This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC Plus will likely stick to its plan to raise oil output for a second consecutive month in May, 4 sources told Reuters, amid steady oil prices and plans to force some members to reduce pumping to compensate for past overproduction. OPEC Plus, a group that includes OPEC and allied producers led by Russia, and which pumps over 40% of the world's oil, is scheduled to raise output by 135,000 barrels per day in May. That would be the second monthly increase under a plan to unwind some of the millions of barrels per day of cuts the group has had in place since 2022.
US and Russian officials wrapped up day-long talks on Monday focused on a narrow proposal for a ceasefire at sea between Kyiv and Moscow, part of a diplomatic effort that Washington hopes will help pave the way for broader peace negotiations. Even as the meeting was underway in Saudi Arabia, where a Ukrainian delegation was present on the sidelines, a Russian missile strike damaged a school and a hospital in Ukraine, wounding at least 88 people. The talks, which focused among other issues on trying to reach a Black Sea maritime ceasefire deal, were portrayed by Washington as a step in President Donald Trump's effort to end the 3-year-old war.
Moving on to the top news in the energy sector.
Indian refiners will issue fewer tenders for crude oil purchases on the spot market in the coming months, company sources said on Monday, as Russian supplies bounce back from sanctions-related disruptions. Indian state refiners had all but stopped issuing spot tenders before this year as they gorged on Russian oil that has sold at a discount since some Western nations halted purchases and hit Moscow with sanctions over its 2022 invasion of Ukraine. But in January, the U.S. Treasury toughened its measures targeting Moscow's energy sector, slapping sanctions on 183 vessels that have been shipping Russian oil.
China's imports of liquefied natural gas have sputtered this year, freeing up volumes that are helping Europe restock its rapidly dwindling supplies following a harsh winter. China's LNG imports are expected to drop by 22% in the first 3 months of the year compared to 2024 to 15.8 million metric tons, the lowest level since 2020 for the period, according to analytics firm Kepler. The decline is due to a confluence of factors, including reduced demand for residential heating in northern China driven by warmer weather, weaker industrial demand, higher domestic gas production and increased pipeline gas imports. Next, we have the top news in metal markets. Funds that invest in gold miners are set to attract their largest net monthly inflows in more than a year in March, as record high gold prices improve firms' profit outlooks and boost cash flow. Although gold prices also rose last year, miners still struggled to offset inflation-driven spikes in labor and fuel costs while facing regulatory hurdles such as tax disputes in Mali and project delays in Canada. As a result, investors mostly shunned equity funds focused on gold miners, opting instead for traditional gold funds that offered a safe haven during the Russia-Ukraine war and escalating trade tariff concerns after Donald Trump won the U.S. election in early November.
U.S. President Donald Trump said on Monday he expects a U.S.-Ukraine revenue-sharing agreement on Ukrainian critical minerals will be signed soon. Trump also told reporters as he met his cabinet that the United States is talking to Ukraine about the potential for American firms owning Ukrainian power plants. A U.S. delegation met with Ukrainian officials on Sunday and with Russian officials on Monday in Riyadh, Saudi Arabia. The talks have focused mostly on a Black Sea ceasefire, but Trump said other issues are coming up as he pushes for a halt to Russia's 3-year war against Ukraine.
We will now look at the top news in the agricultural sector.
The U.S. Department of Agriculture in a weekly crop report on Monday rated 49% of the winter wheat in top producer Kansas was in good to excellent condition, up 1 percentage point from the previous week, but ratings fell in Oklahoma as wind-whipped soils lost moisture. The USDA rated 37% of Oklahoma's winter wheat as good to excellent, down 9 percentage points from last week. Extreme winds, lack of rainfall, and wildfires were reported across much of the state, resulting in reduced soil moisture and crop conditions, said a report issued by the Oklahoma Field Office of USDA's National Agricultural Statistics Service. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.